What is up, everybody? Welcome back to another episode of Money in Motion with myself and my co-host CJ Reichel. Lots to discuss today as we start the day here. Pretty interesting price action in the Qs, kind of a mixed bag there, but also Coinbase continuing to do its thing. CJ, when will it stop? When will the madness end? I think that's what a lot of people are wondering. But
300, not until 300.
That's what you've been, I've got to give you props. You've been saying it. Also, you do have to shave your head though if it hits 300.
Please don't give me props. I'm just. It's
I'm
kind
not
of
giving
an
you
investor
props.
type thing, but it's still true.
I'm holding you to it though. If it gets to 300, you're shaving.
Oh, I will gladly.
Live on stream on the show.
It probably won't be live. I mean, I want them to do a good job if they do it. Maybe we could make that happen. I don't know.
Yeah, we'll see.
Anyways,
how you doing?
a lot of interesting stuff to talk about today. I'm even more fired up than yesterday.
Wow.
Excited to talk about various trades here. But yeah, anything you'd like to kick things off with today?
Well, I just wanted to start with Bitcoin because yesterday on Trading Rebellion with Nick, we talked a lot about Bitcoin coming back down and retesting critical levels. And I think we definitely saw that last night, right? And again, I keep making this point, but I won't stop making it until it's no longer relevant. But, I really do think that it's the crypto-related equities, like Coinbase being up 4% today, Mara up 4.5%, MicroStrategy up almost 2%, Galaxy 2%, Riot 3%. Like they're clearly having an effect on the price of Bitcoin, on the speculative price of Bitcoin. So what does that really mean for us, right? How do we use that to make money? Well, the way I see it is that essentially any days in which you have risk on price action in these major crypto related equities, like what we're seeing today, after a period of extended profit taking, which is what we saw in essentially all these assets, they all topped. People had plenty of time to take some profits. And during that time of profit taking, Bitcoin just essentially traded sideways, right? And we saw a little bit of profit taking in Bitcoin as well. But now we're seeing it come back. And I think that after that, like I said, extended period of profit taking has occurred, I think now we can finally start to see Bitcoin come back up. One thing Nick mentioned, and I think it rings very much true, is the criticality of this 29.5 level, right? Not just as recent resistance, but also or recent support, but also as recent resistance as well. This level is a level at which lots of Bitcoins exchanged hands. We dipped down to that level. Supply was absorbed. Overall, an encouraging development here for Bitcoin today. And I think that ultimately we head back up, retest the top of this range, as long as we see continued positive price action in the crypto related equities. So it's going to be interesting to see, how Bitcoin reacts as the market US equities close today. But nonetheless, the fact that we're seeing crypto related equities start the day the way they are, risk on, has me pretty encouraged. And the fact that we dipped down and we hit that 29.5 level, saw that supply absorption, that's exactly what I wanted to see in order to get a little bit of reassurance in a long. And I'm okay with buying spot here because you can cut it if it dips below 29.5, clear stop loss, and a clear level of taking profit just below this level here of 31.5. I would take profit at about 31.3. And there's your trade for the day for Bitcoin. But I think it would take more than a day to play out, likely the rest of the week. But I think that we could plausibly see bullish price action for the remainder of the week. So that's what I'm seeing for Bitcoin. But CJ, would love to get your thoughts on Bitcoin or anything else that you're watching today.
Yeah, I mean, at the start of the week, we had talked about Russell because that had just been one that had, out of all the indices, had the most shorts. So still have just been, holding longs there. Actually did add a dollar long to that. I think it's a nice hedge because what we're starting to see in the dollar and what I really like about looking at COT data or trading off of that COT data is that the edge is that you're capturing liquidations. And when a liquidation event happens, by definition, in most cases, there's a correlation breakdown. And the reason why there's a correlation breakdown is because there's forced selling, or in the case of the dollar, forced buying because of shorts being forced to cover, or at least just taking profit. So, we had seen sentiments really go extreme towards the dollar last week and towards the start of this week. I think Bloomberg dropped an article. What was it yesterday? We showed it on yesterday's show.
Yeah, yeah,
Bears call the death of the dollar or something.
yeah, something like that.
So anytime you start seeing, news articles like that, you have hedge funds that are net shorts and price starts to rebound a little bit like what it did last night. We also had weaker numbers come in yesterday, and yet the dollar closed up. So I think that could have been considered like a news failure event. But I think, what the trades that I have on in terms of futures is just long Russell, long dollar. I think that there's a possibility of not only them both working, but also hedging them. Let's say if Russell crashes or something, not crashes. I'll say for the record, I think just based on like sentiment and stuff, we could be like 2 years away from a market top in equities or something. If this super cycle really is going towards 2024 and 2025, so
Yeah,
we'll see. But those are mainly the two trades I've been looking at. The other thing that I think's pretty interesting, Monty, have you seen this? People talking about the death of like Verizon. I see Verizon has hit the price that it was in 2010.
yeah.
That's not great. What do you have any speculative insight into that price action? Or I always just like to kind of keep an eye out. Doesn't mean they're going to bottom tomorrow, of course, but maybe in the future, who knows, right? But the sentiment is extreme.
Yeah, it is extreme. And I think Verizon is one of the more like dated companies. When you compare it to other companies that are in a similar space, being like, I mean, I guess you could put Verizon in tech, more so communications, but nonetheless, like tech is their main thing. And for the last 20 years, right, we've relied on Verizon and their cell towers in order to like get reception. That I think is going to be a thing of the past. I don't think we're going to rely on the infrastructure of a couple major companies like Verizon and Comcast to provide the internet infrastructure for essentially the entire um, country. And like Verizon does have good coverage, relative to other um, mobile carriers, but at that same rate, it's more about like, is this company going to be making money in the future? And like when you look at things like AT&T and T and Verizon, you have to wonder like where is their future like what is their future business like model going to look like, because it's not going to be these centralized cell towers that are used to get reception. I mean, we already are on the verge of moving beyond that, where either each individual phone acts as a node to maintain the network. That is something that Web3 is working on. But also, satellite reception is something that very well could be a threat to companies like Verizon and AT&T, which their real only value is their infrastructure, the cables, the satellite towers. That's their
The
value.
stuff we don't really need anymore because
Yeah,
we're all,
exactly, exactly. So
cellular.
now that those things are becoming a bit obsolete, and like really they haven't changed in a decade if you think about it. It's been the same method of, it's gotten better. It's gotten from 3G to 4G to 5G. Now there's 10G, I hear. But nonetheless, I think these are, we talk about dino coins. I think AT&T and Verizon, you could consider those dino stocks, because I don't know how much longer they're going to have them, not like a duopoly here in the United States.
think I had a great grandfather who just put all of his money in AT&T stock and never sold it for like 30 years or something. That worked,
Yeah, you probably
in the
rich as
20th
hell.
century, that worked, but who knows if it will in the 21st century.
Well,
Um,
like think about how innovative that was back then, right? Like the idea of mobile communication through cell towers and like the idea of having a mobile phone that can work anywhere. Like that was an innovative
that was the
concept.
future. That was
Yeah.
literally like a futuristic concept at
But
the time.
now what? Like now what for them? Right? It's like where do they go from?
Glasses, Google glasses. Well, Google will do that. Yeah, right. What now? Exactly.
Yeah,
Um,
so but
Thank you.
TJ,
That was very articulate. A lot
like
of
yeah,
interesting points.
I wanna can I toss a question to you real quick? Coinbase is looking volatile to start the day today. I don't know if you have been taking a look at it while we've been doing the show, but my God, it was up almost 4.5%. I said at one point, and now it's almost back to neutral. Any thoughts on this volatility that we're seeing today, and why or where it may lead?
Yeah, I mean, it seems like there's a lot of sell pressure at the 110 level. At least that's what we've seen.
Yeah,
Like, I view the move in Coinbase. A lot of people will look at a stock that goes up 24% in a day and they'll think about it kind of like an altcoin and say, oh, we need some form of mean reversion. But the reality was, and I actually just looked at the Robinhood stock chart recently this morning, and it actually looks exactly like Coinbase. And I hadn't even been charting it really. But my point is that those stocks had been beaten down so bad that they really had only, in hindsight, the only place they had to go was up, really, or else bankrupt, which both of those companies are well capitalized. They're not going to go bankrupt,
yeah,
at least not for the foreseeable future. But, I think that might have been like a realization of the true value of Coinbase, and that we maybe don't have to have uh, like a like the short float of Coinbase is still like above 20%. So there's still a lot of short sellers in coin. Obviously you've seen some profit taking. The most obvious example that comes to mind is Kathy Wood selling however million she had, taking profit on coin. But you look at things like, Facebook after it gapped up following its earnings, never really had any mean reversion. You look at Nvidia after its earnings, it kind of just consolidated and then went higher. And Bitcoin, or excuse me, Coinbase in this current point, it's kind of just consolidating like Nvidia did after its earnings. So, perhaps we see some mean reversion. But the thing about the market is that anyone who's bullish on coin, let me say this: everyone who's bearish on coin has already taken profit or shorted, and everyone who wants coin for the future wants to buy it at like 70 or 80, like myself. So it seems like the inconvenient situation, ironically, is higher. Doesn't mean it has to come true. That's just kind of how I've thought about the trade a lot, and so we'll see. We'll
yeah.
see.
No, that makes a ton of sense, and it makes sense with the recent price action of Coinbase, Bitcoin, and all the other crypto related equities too. It's like we're kind of stuck in the middle between the bulls and the bears, where people are waiting for that pullback to buy it, right? Like people want that pullback, but they may not get it. And that's one thing that you are forced to deal with in markets. You don't always get what you want, and I think Coinbase may be proving to be an example of that. This 15-minute chart, though, I mean, looking pretty volatile.
Yeah, I love to see this.
Oh
Market
yeah,
bottomed about within 30 minutes of this going live. Bitcoin about to nuke with all of your favorite talking heads. And so yeah, also when we were at that level, you saw funding go positive again. So people started shorting. You saw a reset in the funding futures levels in Bitcoin and alts across the board. That was just a note I had shared in the TTC community, at a nice
yeah,
picture of that in terms of the funding rates. But anytime like we sweep the lows and people start betting on, a downfall or a loss of the range, it's a good possibility that it holds a support. And thus far, we're holding support. So
Yeah. Yeah, right now it seems like um it's going to be an interesting day for Coinbase at the very least, in terms of price action. But one thing that you mentioned there is the funding rate resetting back to neutral, and I think that that is a very important fact, especially when we're talking about the altcoins, because we saw some crazy price action in the altcoins last week, right? Like things like XLM. Let me change the daily chart. Excuse me. Things like XLM, right? And
So XRP was making a run at the highs.
yeah,
Yeah, it still kind of is.
yeah. Let's take a look at XRP. Yeah, so looking very similar, and so these are two examples of assets that didn't fully reset in terms of their funding rate. CJ shared a picture with our community Discord, and uh, he was exactly right. Most of these assets had returned to a neutral funding rate, which is exactly what you want to see in terms of like um, kind of just steady spot buying rather than short squeezing propelling price. And many of the major coins kind of reset to neutral, so we're back at that neutral level where if Bitcoin goes up, I think that the move in these altcoins isn't actually going to come on the back of a short squeeze, but rather come from genuine either speculation, in the form of futures buying, or um, just straight up spot buying. I think both are possibilities, and the fact that the funding rate has reset tells me that people are, um, you know, much like Coinbase, kind of stuck in the middle and unsure exactly what to do with these assets. They're kind of waiting for a pullback to enter, but they very well may not get that pullback. And if they don't, then we may see some FOMO buying as these assets break higher. But in the meantime, just keep an eye on those funding rates because it's very, very important.
Um, I saw some people getting bullish gold yesterday. Seems pretty bad risk reward in my opinion. Um, Especially with the dollar kind of rebounding. I don't know. I think one of our good friends within our Discord, Andrew, made the point yesterday that you look at things this week like the regional banks. This is one we had talked about in terms of like KRE and XLF. Uh,
Yeah.
Most hedge fund shorts there as well. And I think what we saw this week is those starting to get squeezed. And you even have things like KRE and XLF outperforming the NASDAQ and ES today. So, and they typically don't do that. But I think if you look at kind of the small caps, yeah, things like KRE, things like not small caps, but XLF, you're going to see a lot of these earnings come from the financials. And this is kind of the point that Andrew is making that I liked. I think that's kind of the place to be um, as we have these earnings of not only regional banks, but also kind of small cap stocks because of how much short interest has been in those because of funds just shorting them based on their macro bearish thesis. So until those unwind and we have like Monte likes to call this the flip of the switch, which I like. We can just keep going up. I mean, in the short term, we'll
Yeah.
see. There's just an asymmetry in positioning, and that's the edge right now, in my opinion.
Yeah. Absolutely. And not only that, but look at this uptick in volume as we made a bottom, and we have this kind of inverse head and shoulders pattern here. From a technical perspective, not only from a technical perspective, but from also a positioning perspective, like you had just laid out. I think that KRE is one of the better looking charts in the space right now. So props to Andrew. He talked about this yesterday, asked me to do some analysis on it. And I said that um, I liked it a lot. And I actually went ahead and followed him into the trade, and bought some $43 calls, 43 strike calls, that expire on, I believe, Friday the 18th. So I think this thing can keep running. And a lot of it, like CJ said, has to do with positioning, but also look at this volume down here. I mean, like just massive uptick towards the bottom of a range. That's when you see like, we talk about those accumulation structures and breakout patterns. That's what you want to see in order for this to retrace. And I think we may actually get that. So I think KRE and XLF are two of the best looking charts in the space right now.
I've got a couple charts that might look a little bit better.
Oh, let's see
They're
them.
not assets. They're macro charts. But in terms of assets, yeah, I think the ones that you mentioned are solid. But these are charts that will make you very bullish. This is kind of like bull hopium. So kind of just take it with a grain of salt. But I think that they're still worth sharing. And this is one that I had forgot to mention yesterday. Let me zoom in on this. You see that all right? Oh,
Yeah.
my bad.
Yeah, this is a good point. Glad you brought this up because you sent it to me right after the show yesterday saying you had forgotten to mention it. But glad you remembered today because this is a very poignant graph in my mind.
Yeah, so S&P is in white and blue is the average trajectory of the S&P following major peaks in CPI across 12 historical periods ranging from 1950 to 2018. And we could correct here, but this is not really the characteristic of what you see in macro bear markets. This kind of steady grind upward. So, I said at the start of the show, kind of tongue in cheek, I don't think we're going to see a top until, another year or two in the equities. This is kind of the situation that outlines that idea. And I think if you're a sideline hedge fund manager or a sidelined fund manager, and essentially that your job is to give your clients exposure to the equity market, or at least that's what they see it as. When's the switch going to flip to the point where they're like, okay, I was wrong. And a price action like this, it's not necessarily like, economic growth necessarily. It's just bear capitulation. They say the market climbs a wall of worry. This is exactly what I'm talking about. Now, the second image has to do with volatility in the VIX. This is patterns that we've seen going back since 1985 when the VIX goes under 13%. And typically, like when you get in these periods, it lasts for a decently long amount of time. So, if you look at these two charts and you're still sidelined as a fund manager or a CTA or somebody whose job essentially it is to provide equity exposure, when does a bear market flip to a bull market? Is kind of my questioning, and we'll see. Maybe it happens. Maybe we get a horrible recession faster than we anticipated, but maybe the tide turns too. So I think you have to be open to both the recession as well as the super cycle, and I don't think a lot of people are. You see it starting to open up and be more favorable to the idea of a soft landing, but nobody's like gung ho yet, other than maybe like Tom Lee and a handful of others.
And he's been right so far, but yeah, I mean, until we start seeing signs of like it's like you said, my expression, not my expression, but the flip of the switch concept, like I feel like we are approaching that point when you look at that chart of the S&P versus CPI, like where fund managers are going to be forced to take action, right? They can't. A few months ago, we were preaching about the importance of patience and sitting on your hands, and then the market started to move, and we talked about injecting capital, scaling in. These funds are more or less like risk averse than myself or CJ, right? Because they're representing other people's capital. So they are still sitting on their hands. They haven't injected that capital into the space. They haven't been willing to take that same amount of risk that we have that has paid off in the last couple of weeks here. So I do think we're getting close to that point where bearish, what people have been defining as just essentially, an echo bubble or a like all
The
bearish.
echo bubble is turning into a bubble.
It is, yeah. This is no echo. This is the first like the first bubble may seem very small in hindsight if we get continued positive price action, which I don't think is out of the realm of possibility because, like CJ very poignantly put, I think there are a lot of hedge funds that are still sitting on the sideline waiting for confirmation, and eventually they're going to be forced to take action because their customers, their clients, are like, "Yo, the market's going up. Why are we not making money?" And that's a tough question to answer.
Well, rates are
So
going up, and you see, we had this scenario from 1980 to now where rates just decreased, and now that rates are going up, that means the stock market has to go down for the next 10 years. It's like, okay, even if that theory is true, it hasn't been correct throughout the past 6 months.
right.
Why will it continue to be correct? You know, until that theory starts working, it's irrelevant. I mean, keep it in the back of your mind, but you have to look at what's playing out in reality.
Yeah, you have to know when to apply what theory to the market. Like, look at what's in front of you. Now is not the time to be using that strategy. Now is the time to be, taking a little bit of risk. Um, and I think that a lot of people are gonna, finally inject some sideline capital as we see these markets, continue to grind higher. So that's really all I got. But CJ, anything else you'd like to add today?
Just want to make sure we hit everything. Russell, dollar, XLE, KRE, coin, Bitcoin.
Yeah,
Lido is not doing anything.
Google's not really doing anything.
It's flat.
Yeah. So
Yeah, that's about it in terms of updating positions and just I guess blasting the Bears. I mean, I'm sure this episode will end up being a local top based on how much we made fun of the sideline fund managers. But with that being said, I hope you guys have a wonderful week. And yeah, when the music is playing, you gotta dance. Who said that? Wasn't that a guy at Citigroup said that in 2008? Ironically, the music had stopped at that point. But yeah, it was a CEO or CFO at Citigroup, and he said we have to dance until the music stops playing. And I remember Soros, they were interviewing. He was like, "Yeah, ironically, the music has already stopped playing." Um,
and you're still dancing out there like an idiot with no music playing.
yeah, well, let's make sure that's not us.
Yes.
Um,
Yes.
have a
Well,
great one, guys. Monte, I'll leave you with the final words, my friend.
yeah. Thank you guys so much for watching. As always, please like and subscribe. It really helps out the channel. And also, don't forget, if you haven't yet checked it out, head over to tradethechain.com with our sentiment dashboard. You can see what coins are the hottest, what everyone's talking about. You can try it for 14 days, absolutely risk-free at tradethechain.com. Definitely check it out. You'll also get access to a community of traders from all around the world. It's open 24/7. Myself, CJ, Nick, Alex, always in there and always chatting with members. So definitely check it out. You can try it for free, like I said, for 14 days at tradethechain.com. But we have a member webinar today as well. So if you want access to that but are not yet a member, definitely take advantage of that 14-day free trial because we use basically an hour of everyone's or yeah, we use an hour of
We take an hour of everyone's time every Wednesday and never give it back to them.
No, it's the hour is all for them to ask questions and whatnot. So yeah, looking forward to that. But beyond that, have a wonderful rest of your day. Hopefully we'll see you guys at the AMA. Take care and happy trading.